Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good morning. Well, we'll run you through the entire global setup as well as stocks that you need to track. But there are brokerage notes that are coming in, and Hormaz has been doing some reading this morning. He joins us to fill us in with that list. Hey, Hormaz, morning.
Morning, Nigel. And a very interesting note coming in on Reliance Industries, this time from Goldman Sachs, and they've maintained their buy rating. They've increased their target to 3,400 from 29.25 earlier. Remember, last week UBS had also issued a 3,400 rupee price target on Reliance. So that is the highest target for the stock on the street. But the interesting bit is that Goldman Sachs' bull case scenario is implying a 54% upside for Reliance Industries by FY26, and that is a target of 4,495 rupees. And Goldman Sachs believes that the consolidated returns of Reliance Industries are at an inflection point. They are expecting the capex to fall sequentially and returns to rise subsequently. And they're estimating a 17% EBITDA CAGR over FY24 to FY27. And they are saying that returns will rise and they can compound further due to the potential listing of Reliance's consumer business. So keep an eye out on that one. UBS has also maintained its buy rating on ABB India, but it has raised its price target to 7,550 rupees from 5,380 earlier. And they say that electrification and motion businesses will drive growth for the company going forward. And they are expecting more upside to consensus margins of ABB India despite the recent upgrades that it has seen. And they're saying that this earnings acceleration is sustainable, courtesy there are plenty of growth drivers at play. And as a result, they have raised their FY24 and FY25 profit estimates by 12% and 14%. And lastly, Nomura has spoken to some investors in Hong Kong and Singapore on Indian banks, and they're saying that there is heightened interest for State Bank of India and for PSU bank ideas. And the bigger takeaway is that most of these investors largely believe that HDFC Bank has bottomed out. So that is the big takeaway there. But for the private banks as a whole, they see a challenging road ahead because of the tightening liquidity conditions. But among private banks, ICICI Bank is a consensus favorite, but there is also some interest rising for Kotak Mahindra Bank because of the recent underperformance. They prefer banks over NBFCs, and their top picks are SBI, ICICI Bank, Federal Bank, and Axis Bank. Back to you.
Okay, thank you very much for that.